Hello everyone. I'm Marcus, your host at MiloX News. Have you ever wondered how a single product can significantly influence a company's share price? Well, you're about to find out. In today's discussion, we're going to delve into the fascinating world of Tesla and its groundbreaking Cybertruck. Did you know that the introduction of the Cybertruck could potentially increase Tesla's share price by around $70? Yes, you heard that right. By tuning in today, you'll gain valuable insights into the financial implications of Tesla's Cybertruck, understand the concept of discounted cash flow DCF valuation, and learn how product launches can affect a company's stock market performance. This knowledge could be crucial for making informed investment decisions in the future. So, stick around, like this video, subscribe to our channel, and let's get started. Recently, it was announced that Cybertruck production will begin and that 2024 will be the first year we'll see a significant increase in Cybertruck production. But the key question is, what does this mean for Tesla as a company and, more importantly, for investors? What impact does it have on the share price? Because, at the end of the day, every Tesla investor cares about the long-term price of the shares. So, what effect does this have on Tesla's share price? We're going to look at the DCF without the Cybertruck and the DCF after the Cybertruck goes into production, and we'll see the difference in the share price. Don't forget that the stock market always looks to the future. So what I'm going to show you on the screen will quickly be reflected in the current price of this company's shares. It doesn't wait for the event to happen, but once the level of certainty increases, it will primarily be reflected very, very quickly, especially with a stock like Tesla that tends to reflect future success very, very quickly. Therefore, the window of opportunity here is not large, as is always the case with Tesla. There are people who will be cynical and negative and will miss this opportunity, and that's okay. This video is not for them. Now, what we're looking at here is the DCF model I'm going to use for this video. A DCF model is not perfect, but I believe this is the way to go. Here we have the calculation of the cost of capital to estimate how much the company is worth with the Cybertruck, and without it, we first need to establish the base. Every DCF model, at the end of the day, is one thing and one thing only: the sum of all cash flows that Tesla will generate in its life cycle, discounted to today's date based on the company's risk profile. For example, if I owe you $1 million in 5 years and I offer to give you a lump sum today instead of that million, how much do you think you would take? You'd probably take 300,000, 400,000, 500,000, 600,000, depending on how much risk I represent. If I'm a wealthy person with community ties and I'm making a lot of money and I'm respected, then my risk profile is low. But if I'm a suspicious guy and I owe you $1 million and you don't even know if I'll be there in 5 years, you'd probably take 200,000 just to eliminate that risk. That risk, the higher the discount rate, the lower the company's valuation, the more future cash flows are crushed. In the case of DCFs, we use a customized cost of capital to reflect that risk. That discount rate is essentially the company's average weighted cost of capital, and this is what you're seeing here, the WACC. So this is the calculation of the WACC, Tesla's average weighted cost of capital. Tesla's average weighted cost of capital is 14. Now, the reason it's 14 is very simple. Just to keep things at a high level, it's because Tesla practically has no debt. So, Tesla's cost of capital will primarily be the average cost of capital it has, and since they have no debt, then it's practically 100% based on how much the equity capital costs. And the cost of equity capital for Tesla is 14. The way it's calculated is not very complicated. You can see it here on the screen. You can pause the video, but essentially we take the risk-free rate. We take the percentage of equity capital. We take the total value of the equity capital, the risk premium, which is practically how much you can get in the S and P minus the risk rate. And we create a calculation that gives us 14 for Tesla. Now, 14 is not cheap. It's a high cost of capital. Most people who do Tesla DCFs use 10 or 12, and I think that's wrong. I think 14, although it's very hard on Tesla, is the correct way to do it. So I believe Tesla is a discount rate of 14%. Next, we go to sales and quickly review the sales. Of course, you can see here that the Cybertruck is at 0. We have a revenue growth of 35% without the Cybertruck, and at the end of the day, we're going to base it on an EBITDA margin of 19%. This is what we're going to get in terms of a DCF. Now, this DCF includes $73.3 billion in capital expenditures, mainly to build new factories, again without the Cybertruck. I think $73 billion is normal and an effective tax rate of 8%, which is where Tesla operates in the general sense of the word. We're creating here a line of free cash flow FCF for each year in the future, and then we're reducing it. We're discounting it by the discount rate, by the WACC, the average weighted cost of capital, based on the number of years we're going into the future. So, at the end of the day, we get this sum of present value. Now, $133 billion is what we get here, and that's how much the present value of all Tesla's future cash flows is worth. But wait, this is not the end yet. We also need to include future growth beyond that 5-year period, and this is what we get here. The present value of the terminal value, $427 billion, and the total is $583 billion, because we also have to take into account the large amount of cash they have and the lack of debt. So, $583 billion. This is the total value of Tesla without the Cybertruck based on my DCF. Of course, I'm also using a multiple here, a video multiple of 10, and that's going to give me $676 billion. So, without the Cybertruck, Tesla, based on a very, very conservative model with a 14% discount, which is very high, $73 billion in capital expenditures, is between $583 billion and $676 billion as it stands now. Obviously, it's trading at $880 billion, but this is just to show you the impact. Now let's add the Cybertruck. The only thing we're going to change here is that we're going to add another $20 billion in capital expenditures. We're going to go up to $94 billion in capital expenditures from 73 because we believe that another $20 billion is what it will cost to build more factories to make these additional Cybertrucks, and we're going to assume that Tesla will eventually ramp up to 100, 300, 500,000 units of Cybertrucks at the maximum level of capacity for the near future. Again, same data, same discount rates, same everything. But look at the difference here. $773 billion in total value and $916 in multiple value. And now let's go back to the original DCF and look at the share price here. In the original DCF, without the Cybertruck, Tesla currently has $199 per share. But once you consider just the Cybertruck, not the semi, not the insurance, not the Tesla bot, none of these AI things, not the robo-taxi, we still have a lot of things to add to this DCF for it to really make sense. But just the Cybertruck adds from $199 to $266. This is with the Cybertruck. So, we're talking about an increase of about $70 per share just in the delta between without the Cybertruck and with the Cybertruck. So, that's a 70 increase in the share price, which I see will be reflected in the share price from this point on. I don't know how long it's going to take. In the case of Tesla, it usually takes much faster than other companies because Tesla tends to reflect future success now. Always remember, with Tesla, it's always reflecting the future faster than most other companies. Therefore, it will never trade at the level that is fair value. Tesla is always trading forward. It's always trading based on future success. So, when you get this fair market value of $266, don't expect the company to drop to it. It could. It might not. I don't know. I don't have a crystal ball. This is not financial advice. I'm not telling you to buy or sell Tesla. I'm just telling you that I believe the difference. The impact here, if you were wondering what the impact of the Cybertruck is on Tesla's share price, is another 70 today for the share price. Again, I don't know when it will be reflected, how long it will take, how much of it is already reflected, but that's the difference. I believe it's massive for Tesla. It's massive for the automotive industry because, at the end of the day, we're talking about Tesla entering for the first time in history the most lucrative target market of the US. Automotive industry, trucks. I mean, pickup trucks. This is the bread and butter of the US. Automotive industry. In fact, the North American automotive industry and Tesla finally jumping into that category for the first time in its history is going to shake everyone's world. We're talking about a very cautious estimate here. That 70, I believe, is just the beginning. As always, thank you to watch. Don't forget to like this video and subscribe to our channel. I hope you enjoyed this video, and I invite you to leave your comments in the comments section. See you in the next video. Until next time.